let's talk about gold funds. Over the last few months, we've seen gold funds that have given better returns than gold ETFs. This in spite of the fact that that gold funds invest in gold ETFs. What's the reason behind this peculiar change?
Yes, this is quite unusual for a gold fund which invests in gold ETFs to generate more return. That is because of an aberration. Because the gold ETFs are trading at a premium. So in that, and gold funds, the open-end funds which invest in the gold ETF, they are valued based on the market price of the traded price in the exchange. So this has led to this kind of aberration. This is unlikely to prevail, and also this speaks a lot about the valuation basis, the basis of valuation of the gold fund and the gold ETF, because there seems to be a disconnect. Gold ETFs are trading at a premium. Gold ETFs are trading at a premium because the actual price, or the purchase price of gold for these ETFs will be about as much, and the open-end gold funds are being valued based on the gold ETFs, the traded price. So in that sense, this is a complication. This is an aberration which will at some point all these prices must converge, and if there is a discount or premium, it has to be in a very narrow range. So this will vaporize at some future date, and I don't know what it will hurt, whether it will hurt the gold funds or gold ETFs.
Dhirendra, would you then advise investors to take arbitrage and take benefit of this arbitrage opportunity rather?
There is a very limited avenue for investors to capitalize or benefit from this arbitrage opportunity. The only logical thing which any investor should do is, if you are investing in the open-end gold fund, get out of it. You are getting more than what it's worth.
Okay, Dhirendra, let's take in a few viewer queries as well. This one's from Sirish. He says, as the US economy is slowly looking up, he's thinking of investing in an international fund. His preferred mode of investing would be via the SIP route. He wants you to help him by suggesting a mutual fund from a 4 to 5 year time horizon.
Yes, the US economy has definitely looked up from its lows of 2007 and 8. And from there, the Indian investors in such fund, when we compare the return of these international funds which are focused on the US market, they have generated superior return, also because of our currency devaluation. With weakening rupee, those returns have got enhanced, and that may not be a replicable thing. But yes, investing in US economy may be a good idea and a reasonable diversification. Another reason why we are of the view that US funds make sense, because most of the underlying companies are global companies, so the businesses are diversified, even though they may be domiciled in the US. So it is a good logical step to be investing in such funds. Choosing funds, you have plenty of options and varied options. One is the Franklin Templeton US Opportunity. That is something which is an actively managed fund, good track record. If you want to actually take a conservative bet on well-established global companies in the US, then ICICI Prudential US Blue Chip Fund. That is another route of achieving that. If you are looking to bet on technology companies in the US, then Nasdaq 100 is one option. So you have varied things to choose from, which part of the market you want to be in. If I have to choose one, I would choose, for your SIP, I would like to choose one of the two, which is Franklin US Opportunity or ICICI Prudential US Blue Chip Fund.
Dhirendra, really appreciate you taking the time out and speaking with us today.